What's up, everybody? My name is Joe Brown, and this is Heresy Financial. We all know the story by now. A nation enraptured by the invincible and endless returns of real estate, to the point where most normal people are investing in real estate instead of any other investment vehicles, simply because it's being touted as the only thing that can only always go up. And its recent performance has been stellar. In fact, it's a significant percentage of GDP, and almost every single major financial institution is deeply embedded in this real estate market as well. But when you start to dig into the details, you realize that many people own 2 and sometimes 3 homes, and to make matters worse, many of these additional homes are just sitting vacant. So many of them are vacant, in fact, that sometimes even entire housing developments are sitting vacant. You realize that many of these homes are just owned by people who own them because they're banking on the fact that the prices will continue to go up. And the final nail in this coffin is the amount of leverage in the system. And at some point, all that leverage in the system catches up to somebody. And that somebody just happens to be an over-leveraged financial institution, one that just happens to be absolutely enormous. And this financial institution had so much hidden leverage that it collapsing due to real estate slowing down threatens to destabilize the entire global financial system. Now, you might be thinking right now, yes, I know this story. I watched The Big Short. I know this happened in the United States with the housing market 12 years ago. Lehman Brothers is the financial institution that you're talking about. I know this. But I wasn't talking about the United States 12 years ago. I was talking about what's going on in China today. So in this video, we are going to talk about what is going on in the Chinese real estate market today, what Evergrande has to do with it, and whether you need to be worried about this triggering the global financial crisis 2.0. Ready? Let's dive in. It's no secret that China's growth over the last few decades has been absolutely unprecedented in world history. They've achieved almost an average of 10% GDP growth every year for decades. And lifting 1 billion people out of poverty is no joke. There has been real growth that has taken place in China. And much of this growth has been on the back of real estate. Now, just to get a glimpse of the massive scale of development that's been happening in China recently, we need to look at the amount of concrete that they use. It's so much that if you compare all of the concrete that the United States used from the year 1901 to 2000, 100 years, the entire 20th century, was less than China used in just 3 years between 2011 and 2013. And this wasn't an anomaly because they did it again in just 2 years for the years 2013 and 2014. Now, one thing that's unique about the way China does things, obviously they're still a communist country, so the state owns all the land. So when you see all this development happening, what's really going on is the state is leasing out rights to use that land, usually in 50 to 70-year contracts. This land is then developed on, and then those homes are then sold to Chinese citizens. This has resulted in real estate being the primary driver of the growth of wealth for most Chinese citizens for a long time. Another reason that so much individual money has been going into real estate is because their financial markets, like stock markets and things like that, they're just not as sophisticated and as developed as they are in most Western countries, especially the United States, which leaves real estate as basically the only option for the average person to buy something that has a reasonable expectation of making them money going into the future. Further adding fuel to this fire is the demographic situation that's been going on in China over the last few decades. There has been a massive migration from all the rural areas into the city centers as people seek new opportunities for earning higher income with better jobs and placing their kids in better schools. And obviously this has caused massive demand for somewhere to live. But as normally happens with markets that are growing quickly, they can become frothy very quickly. And that's just what happened with real estate as the new supply started to outpace the usable demand. And that's important, usable demand, because this is where the ghost cities come into play. And I'm sure we've all seen pictures and videos of these massive cities that are just, towers and towers and towers of big, huge apartment buildings and city areas that are completely abandoned. It's just eerie. Ghost cities that were developed and there's just nobody left to move into them. But this is old news. It's been happening for a while. So you might be thinking, well, they've been able to get away with building cities that nobody needs or uses or lives in for a while now. So why is it all of a sudden now causing a problem? The reason is what I alluded to earlier, which is usable demand. Despite the fact that there's way more supply than usable demand right now, there's still demand to buy these properties. In fact, all of these homes are owned and already purchased by individual Chinese citizens. The problem is that there are many people who own 2 or 3 homes, and those second and third ones are just vacant. And almost everybody is just banking on the demographic trends of the last 20 to 30 years continuing, which is the migration to the cities. So what is the problem with this expectation? Enter the population pyramid for China. Now, we all know that China has had a one-child policy for years, and even though they have recently just updated that, and now they're at a 3-child policy, this has done almost nothing to undo the decades of cultural habits, and their birth rate is still at best 1.7, 1.8, and some estimates say as low as 1.18. And you need it to be 2 just to sustain the population. In the United States, we're at about 1.7, but at least right now we still have immigration that's continuing to make up for our too low birth rate, so we don't have a population implosion problem in the States just yet. But in China, their population pyramid is a problem specifically because of who it is that has moved to the cities and who there's left to move to the cities. Because for the most part, people who are aged 30 to 50 or 60 have already moved to the cities, and there's just nobody left who has the productive capacity to increase their income enough to come in, be productive, buy real estate. Everybody that had that capability has for the most part already done that. And the people that are left in the rural areas are for the most part too old to come in and make enough income to be able to, on net, generationally come in and purchase up all of that unused real estate. This means that the migration from rural to urban has likely already peaked and will only decrease into the future. And since their birth rate is in between 1.2 and 1.8, it's not like you can rely on later generations in the cities to grow up and pick up the slack. All right, now enter Evergrande. Evergrande is a real estate developer in China, among many other things. They're a massive company. They've got an electric car unit, grain, dairy, entertainment, many other things, but their core business is real estate development. And they are no small player. In fact, they carry the badge of holding more dollar debt than any real estate developer in the world. $300 billion worth, to be precise. Evergrande is so large that their debt accounts for 16% of all outstanding notes in China. Now, their debt is one of the reasons they've been able to get so big so quickly. In fact, in 2009, when they IPO'd, they had less debt than their equity. They had a net positive cash position. But this ever-increasing debt load has been like a snake eating itself by the tail, and increasingly so over the last few years. They've got a collapsing stock price, and every time they've tried to issue new debt over the last couple of years in order to pay out their old debt and fund some of their development, they've had to pay higher and higher interest rates on that debt, which is just delaying the inevitable. So it is yet to be seen how this exactly will play out. But there are a few things that we need to watch. The first thing is Chinese investors who purchased homes through Evergrande are probably just going to be wiped out. This is because Evergrande sells properties years before they're actually finished, and they use that money that investors gave them to build the properties. So there are many Chinese who will not be getting any of their money back, and for many, this is their entire life savings. Now, the other reason why this has started to unwind recently over the past couple of weeks and past couple of years is because China has increasingly been trying to crack down on moral hazard. If you're not familiar with moral hazard, it's a system where there's either explicit or implicit bailouts, especially for the larger companies, so that everybody knows, hey, if there's a big problem, we know that the government's got our back and will bail us out. So it encourages more risk taking because, if you take more risk, then your reward, if you succeed, is likely to be huge. But if you fail, you're not going to have any pain because the government's got your back. So it increases what we call moral hazard. Over the last couple of years, China's been really trying hard to crack down on this moral hazard, which is kind of funny because it's really like the opposite of what's been happening in the United States, where we're propping up failure and propping up economic loss instead of trying to crack down on moral hazard. And the reason they state is because they want the more risky businesses to either become more conservative and succeed, or let them fail so that everybody else has to become more conservative, so they see, hey, we can't just rely on the state to bail us out every time we have problems, so we need to have more robust businesses, and then long term that contributes to much more robust growth going forward. But massive companies like Evergrande might just be so big and so intertwined in the rest of the system that they force China to kind of backtrack on that policy of cracking down on moral hazard and really give them the bailout that they're looking for. And this is because it's not just individual investors investors who are looking to purchase a home from Evergrande that are going to be out their money. Major banks and financial institutions all throughout Asia have a lot of money with Evergrande as well. And if any of those financial institutions that are invested in Evergrande are themselves highly levered and over leveraged to the point where a complete failure on Evergrande's part would cause a default or insolvency on the bank's part, well, this is why people are calling it China's Lehman Brothers. Because it's very possible that if Evergrande is allowed to fail completely, it could trigger this domino effect that could trigger global financial crisis 2.0. Because once you hit the banks, you really start to hit all the banks. Because they are all so interconnected and they all have massive balance sheets that are predicated on the assumption that nothing will happen that's not supposed to happen. Like, I don't know, a seemingly state-backed real estate developer that is too big to fail being allowed to fail. And so it's possible this could bleed over and cause massive losses and potentially full-on collapses of giant banks, financial institutions like HSBC that would bleed over into the highly geared banks in the Eurozone, where their balance sheets are geared to astronomical levels. You've got banks in Europe where their total market share is a small fraction of their balance sheet size, meaning that if you have losses on your balance sheet of 3, 5, 10%, that will completely wipe them out. Now, again, only something that is not supposed to be able to happen could cause something like this, because these banks are very careful to construct their balance sheets with slightly offsetting bets. An example of this is that you owe me $100 and I owe him $99.99. So there's a 1 cent spread on that. I have free money there. And so because I have free money there, I go to somebody else, I get a massive loan, and I ramp that up so that that 1 cent I can repeat 100, 1,000, 10,000 times, and it's risk-free because yes, I owe $99.99, but you owe me 100, and so I've got offsetting bets, and then since they're offsetting, I can lever that up as much as I want, and I get my risk-free spread. But markets can remain irrational longer than you can remain solvent. And it's possible we are already starting to see signs of this bleeding out into other financial markets. I haven't been able to confirm this yet, but it's very possible that the very quick and huge price dump that we saw in the price of gold was a result of forced liquidations. We all know that in China, whether you're a citizen, a corporation, the government, they really love gold. They have a high focus on gold, and it's possible that somebody is forcing somebody else to do some massive unwinding of gold positions. Because in a liquidity crisis, you don't sell what you want to, you sell what you can. All right, so what is the good news here? Is there any good news? Well, number one, this is not inevitable, and number two, you can do something about it. So it's not inevitable because number one, if we look at the people who own these second and third homes all throughout China, it's not exactly identical to what it was like 12 years ago in the States. It's not adjustable rate ninja mortgages, which are no income, no job, no asset mortgages with rates that are going to spike in a couple of years and no down payment. There are very tight lending standards in China, which means that these second and third homes that are being purchased in China are many times being purchased with 30 to 70% down. So it's not like a slowdown or a downturn in real estate prices would cause a mass exodus, a mass liquidation, foreclosures, people underwater in their properties like we had in the States. The second thing is that given the amount of political pressure that this is causing or could potentially cause, there's a high likelihood that the Evergrande gets the bailout they're looking for. But markets, especially in the West, look like they are severely underpricing the likelihood that this bleeds over whatsoever into broader financial markets. So placing small bets with limited downside and unlimited upside on the dollar, European banks, US treasuries, even the US stock market might be something to consider here. It's very easy to do with simple option strategies, and you can further control your risk and reward parameters with more advanced option strategies that I teach in my options courses linked in the description below. And if you're looking for an advanced trading platform to use for options that is not for beginners, I like Interactive Brokers for their pricing and their broad suite of capabilities. I've got them linked in the description below. So in summary, Evergrande is a real estate giant that became way over leveraged and now looks to be looking for a government bailout. This bailout will likely come in one form or another, but if it doesn't come, not only will millions of Chinese citizens be completely out their investments and many times their life savings, but it could easily spark the next global financial crisis and start knocking taking over banks around the world like dominoes. Now, of course, I will keep you updated as more information comes out about this, but as always, I really appreciate you guys. Thank you so much for watching. Have a great day.